Hey, what's going on, everybody? Welcome back to the channel here at Crypto Nation. If you're new here, it's totally free to subscribe and hit the like button for post notifications. So yeah, let's get right on to it. So this is going to be another episode of Crypto Nation Reacts. This is from the Alcorn Daily. Title is called Tom Lee. Markets are about to get effed up. So let's see what they're talking about here on this episode. By the way, don't forget to subscribe, hit the like button for post notifications. Let's get right on to it.
New market prediction for Q4 2024 going into 2025.
The big move has happened. The question is, do you see that doubling?
You remember Tom Lee, of course. He put himself on record multiple times this year and last, calling for a $150,000 Bitcoin price in 2024. This is him making that prediction at the end of 2023.
I always like hearing your price targets because you are so fearless. Where are you on Bitcoin by the end of next year, let's say?
Well, if the spot Bitcoin gets approved,
Yeah.
I think the demand will be greater than the daily supply of Bitcoin. And so the clearing price, this is done by Sean Farrell, who's our crypto digital strategist, is over 150,000. It could even be like 180,000.
But that's only if only if the ETF gets approved.
Yeah, and
so
US,
this is a big F.
a spot US, because
Right.
a spot Bitcoin ETF is approved outside
Right.
the US.
Okay, but if it's not approved, then are we just lingering around 29,000?
There's still upside counts because of the halvening next year. So you'll have a drop in supply again. So the clearing price has to increase, but it won't be.
Have you ever wondered how the world's currencies are traded? The foreign exchange market, also known as the FOREX,
Six figures.
And this is him standing by that prediction right before Bitcoin's halving in 2024.
I said 75. What did you say to me?
I think it's, could be as high as 150,000 this year.
So double what I thought was.
Yeah.
150,000, so we're tripling at this point.
Yeah, because you've got demand improving with the ETF, and you have the supply shrinking with the halvening. And if monetary policy eases, which we expect, that's supportive of risk assets. And Bitcoin's holding up. I mean, that's another reason why I don't think a drawdown's going to start that soon. I mean, Bitcoin's been rallying the last couple weeks.
Now, Tom Lee just graced CNBC with his presence again, giving us a new interview, updating us on his thoughts on the market. The question is Tom Lee changing his tune because some things have changed, or what does he think?
I think we're still in the midst of a very tricky period because we've got the election in less than 35 days. And now we've got two things that investors don't know how to discount. One is, mounting tensions in the Middle East, and then a port strike. I think that as investors worry about this, if we get a dip, and a big dip, I think you still want to buy that dip because the setup into year end has a lot of tailwinds.
So, short term, expect volatility. Let's talk worst case scenario. What is the worst case scenario?
The worst case scenario for the port situation is something that we've seen. And we shut down an economy already, and that was probably a time to buy. We know that. So we've seen that movie before. Could it be? I can't imagine it could be as bad as the pandemic, but we have shut down an economy before.
Yeah, that's right. So I think it creates headline risk because, the longer this strike lasts, there'll be companies that miss. And so S&P earnings might get downgraded or some stocks might miss results. But that's all just temporary. I mean, those are just short-term headwinds because it doesn't change the long-term outlook.
What about prior war times? Let's learn from history.
It's very strange that I don't remember any war that where the effects, and we've been through quite a few back in the 90s and in the 2000s. It never seemed to have as negative an effect on the overall markets as we thought at the beginning of each.
That's right. In fact, if we look at the last six sort of global wars or tensions, you almost always buy the invasion. The exception was 2022 with the Russia-Ukraine war because we were also in the midst of a Fed tightening cycle. So that was not a buy the invasion event. But the other times you did want to buy.
Both Iraq wars.
Yep, both Iraq and.
Was the market, where was the market before that happened? Had levels come down, or were they trading at near highs or at highs?
Yes, This is different because we are hovering near highs and we're in an extended market.
And things aren't cheap in terms of multiples.
That's right. But at the same time, we also know there is a lot of cash on the sidelines.
Right.
Because margin debt hasn't risen for 4 months. I mean, that's pretty unusual with a rising stock market. And now money market cash has actually been rising at a time when the Fed is cutting. So I do think there's firepower.
So, buy the dip is the takeaway that I'm hearing. History shows us that it's usually smart to buy the dip during times like these. But what about the other issues? Have you heard about the massive longshoreman strike, the dock workers strike? How does that factor in?
The other issue, just the longshoreman strike, if that goes on for an extended period of time, is that something? We were talking before how much that cuts off the GDP. If it's there for a week, maybe cuts 0.3 of the GDP.
Yeah.
For every week they're out. Is that something that the Fed comes in with much more aggressive cuts and that fixes things, or are there inflationary factors that also come into play and that ties their hands?
I mean, the Fed has to kind of put that in their calculus because the labor market has also softened. So if this is a shock in a way that causes the labor market to weaken, the Fed's going to be a lot more dovish. But we get the payrolls report Friday, and I'd say maybe it sort of early hints seem like it's actually going to be a better than expected report.
So there's a multitude of factors to consider here. Understand there are multivariants. It's not just one thing. It's not just one variant. There are a multitude of variants.
But then you also add in what would happen from inflationary pressures, not only from the longshoreman strike, but potentially from oil prices going up in the Middle East too.
Yeah, that's right. I think the Fed at this point would be more concerned if the consumer expectations got unanchored on inflation, and those have actually been improving. So I think the Fed can be less worried about the inflation side of it.
Did you see Tepper talking about China? Would you ever
Subscribe to that theory?
buy a lot in China?
Yeah, I mean, I'd say that not only did China launch a bazooka, but it's really working, right? Because the stock market has really broken out. I think China is now the best performing stock market this year.
But was the move made? I mean, I think, we had Kyle Bass on yesterday, and I think he would argue long term, no matter how you want to think about China, it's a bad bet. He was suggesting maybe in the short term, it's a good bet. And I don't think he was necessarily opining on whether the bet is over.
Just says
but the move, obviously, the big move has happened. The question is, do you see that doubling? Is that in the cards at this point of the game?
Yeah, I mean, something to keep in people's back of their mind. Over the last 10 years, China has underperformed the U.S. by 7,700 basis points. So if China doubles, it's still underperformed by like 5,000 basis points. So, I mean, there's a lot of room for a rally, even if it looks corrective.
I think his phrase was something like, it's just a bad bet on communists.
He's saying long term it's a bad bet, but he's saying short term it might be a good bet.
It's not our grandfather's communism. It's almost, I don't even know, what do we need a portmanteau for what capitalism, based with communism is?
Yeah.
Bidenomics, maybe. Kidding, Andrew. Kidding.
So expect volatility short term. Long term, he's still long. Something like this is still in the cards either this year or beginning of 2025. There's more to the story here. We're going to update you on this story soon, so subscribe to the channel. We publish one video every day, keeping you informed on the entire cryptocurrency market. The market's just about to start heating up. You don't want to miss anything.
Well, anyways, that concludes that episode. Tell me what you think about what's going to happen over the next few weeks here. But anyways, let's take a look at Bitcoin right now. We got it at Bitcoin. The market's been trading sideways. We kind of dipped over. A lot of altcoins dipped overnight. Bitcoin is still at 61,000. Okay, 62,000 now. And Ethereum is at just over 2,400. So there we have it right there. But anyways, thanks everybody for tuning in. Don't forget to subscribe, hit the like button. Hey, if you'd like to support the channel, to get the channel membership, I'm going to be dropping a video here shortly to the channel members. But anyways, I will talk to you guys. See you guys in the next one. Peace.